Yeah, and that's what people are agreeing with. Futures pointing to a big rally on Wall Street today over the concerns easing over a potential trade war. Joining us right now to talk more about markets is the president and chief investment officer for Portfolio Wealth Advisors, Lee Munson. Lee, good to see you.
You too.
What's your take on this market here? Big rally this morning, that's for sure.
I mean, I knew the gig was up on Friday when we closed 7 points above those lows early in February. So I knew that we'd have a rally here. You know, I think if you look at Century Aluminum, that's the tell of this market right now. You saw how they punished that stock last week because everybody on Wall Street knows that this is all bark, no bite. I think we're going to see a lot more talk about these tariffs, but I would have investors avoid any trades that have to do with the tariff play, because I don't think it's going to be what people think.
So you still like stocks here?
Oh, I do. I think you commit money right here. I think this is your second chance to get the low of February. I went in there about the Thursday, Friday after that flash crash on February 5th. I did my buying. I'm done buying for the year. Unless I see this market go down to 2,500 on the S&P, I think this is your only second or third chance you're going to have for the year. I would commit money to big, long lists of stocks. I'd keep it smaller and nothing that has to do with a tariff.
Is there any specific sector, Lee, that is more interesting for you for the balance of the year, recognizing that we're going to have more volatility this year than we've had since the president was elected?
Right. Well, I would probably want to focus a little bit more on old economy stocks. I'd probably want to look at the smaller capitalization stocks. I would not be looking at tech right now. Hey, you know, this reminds me a lot of .com with the Facebook and the Googles. You know, people are talking about standard commerce and standard social and standard search, meaning Amazon, Google, Facebook, those type of things. I don't want to, you know, this reminds me of buying Cisco at the peak back in 2000. It reminds me of buying JDS Uniphase. It reminds me of those Yahoos. So I think you got to stay away from the tech sectors because really every time we have these tariff problems, small caps pop up and it's the large caps that are punished because that's where all that hot money is.
What do you expect? I think what's interesting about particularly what happened in the market last week is how much the markets seem to be driven by headlines out of Washington, D.C. And the volatility that those create. And when you have different people saying different things who work in the White House, it really has, because a lot of times people talk about it and you don't see it show up in the stock market. How is this different? And is this going to be a problem for the rest of the year potentially?
Oh, problem. This is a gift from the gods. I mean, never has something so immaterial as what happens at the White House affecting markets. I mean, this is what's giving us volatility. Remember last year? I couldn't get Trump to say anything to move a market, and now anything that comes out of there, we're getting market volatility. So I think that investors need to look at this as a gift that's bringing down prices for you to commit capital. I don't want to see a redo of last year where, when am I going to put in money? It just goes up every day with no, you know, just unrelenting.
You know, one of the things that I think is so interesting is the markets seem to react so much to the president on the downside. So we see this lately, and there's just been these hysteria, I think, in some ways. But when it starts to correct, we're not seeing as much, you know, as much of the positive side of things. So right now we're looking at things getting better. Does that mean that people aren't concerned about what's happening with China, that things are going to get better, that maybe that the Trump move was a smart one? Well,
I think people are starting to realize, again, Century Aluminum was the tell last week that shows us that if you really think that tariffs are going to be a problem, why is that stock selling off? Look at those steel companies. I think everybody knows that Trump wants to negotiate. I mean, look who he hired to replace Coney, you know, Kudlow. I mean, that guy's like a pure supply sider. So I think that when people have to realize, news flash, market goes down. The only thing that makes that market go up is slow and steady progress on profits and corporate earnings.
And you're still positive on earnings?
I do think. I don't think we get earnings.
I'm sorry?
I don't think we're going to have earnings profit problems for the rest of the year.
Okay, well, we're expecting 18% growth, so yeah, so you're expecting that. The Federal Reserve is unwinding its balance sheet, $4.5 trillion. Right. We see that the Fed has started to raise interest rates. Any worries there?
Not particularly, because I don't see an inverted yield curve yet. I mean, we still have long rates, you know, more or less above the short rates. I think that the market has already come into the reality that we're going to get 3 or 4 rate cuts. But, you know, when you read into the notes...
Rate hikes, you mean?
Rate hikes.
Yeah.
I'm sorry.
Yeah.
You know, hope springs eternal,
Let's see what that moves the market.
Yeah, I think I just moved the market.
And they're talking about John Williams, president of the San Francisco Fed, taking over the New York Fed.
Total status quo.
Okay.
Yeah, total status quo. So I think if that guy takes over, we're not going to see anything shocking. And by the way, when you look through the notes, you know, most of the people on the Fed governor, on the board, are looking at less cuts, less hikes than those wanting to raise.
All right, we'll leave it there. Lee, great to see you.
Thank you.
Thanks so much. Lee Munson joining us.